8th of January 2024. Wow, this is my 888th video, guys. It has been some time, and I've been doing my best to send you all the market outlooks and analysis from different people. And of course, some of the materials I collected from other YouTubers. I'm not going to lie about it, and because they are the good people, they easily have hundreds and hundreds and thousands of subscribers. And I think that their artwork, their analysis is fantastic. And then I basically condense it and put it up for you. And in fact, today itself is so important because I believe that the perfect economic indicator is showing that we are already in a recession, right? This indicator hasn't been wrong since 1960s until now. So to me itself, we are definitely in recession, and this is a must-watch video because by the end of it, I'll show you how to win some ticket for a movie gathering. Now, before that itself, once again, disclaimer apply as usual, and thank you, Ames, for all this kind sponsorship over the last few years. Now, first of all, we have been warning a lot of people regarding about the market, if you remember. Now, we talk about basically the big boys like Mark Zuckerberg, this Tim Cook, Jensen Wong, they're all selling their shares, okay? Not everything, but some of their shares. And they don't sell shares, but yet they're selling right now. This is very interesting. And in fact itself, JP Morgan, Jason Hunter, all right, he has been pretty spot on this year. Now he's warning again that there could be some selling coming in. And proven effect of that itself, right? The US LEI is showing that the second wave, inflation wave, is going to kick in. And of course, itself, right? With the market so overbought, there are really people buying even at the levels right now. But the problem is this: anyone who's been buying the last 2 weeks are pretty caught at the moment. If you look at it right now, the chart shows that, right, the market has hit a peak 2 weeks ago. The high of the Dow Jones was 37,778. That's a very beautiful number. So if you ask me itself, right, this week, there's a very good chance the Dow Jones may have the potential to drop back down all the way to 36,970. Now, this is my first target, and hopefully it stays there, because if not itself, there will be more selling. So I'll tell you more in details later. But then again, let's go into the deep fundamental. And this video is going to be longer than usual because there's so much thing to share with you. All right. Now, the thing is this: the sudden layoff at Lazada is really the beginning, in my opinion. When the sudden layoff at Lazada left people crying, baffled itself, right? More than 100 co-workers were being laid off. Now, to me, this is very clear that we are actually having some serious issue right now. In fact, itself, right, some had to cancel their leave to come in for a sudden meeting, and then people were crying, okay? They were crying. They describe it as unfair or opaque and baffling, right? So obviously, the management say that it's because they need to sustain the business, the growth, and so forth. But to me, right, this is really the start. And if you look at the COE prices, suddenly it dropped. All these are coming because I believe that we will enter a recession very soon. So if you go back again to Manpower, Ministry of Manpower back in 2009, right? We saw that layoffs start to surge quarterly, offering more than affecting more than 9,410 workers in the fourth quarter of 2008, and was because of Lehman Brothers. And if you look back again, all right, it was because of Lehman Brothers, the thing, and the banking crisis lead on, and Singapore has its worst ever recession. Now, if you ask me itself, right, I think if US really caught that cold, Singapore, all right, or Rust, all the regional country will get the flu itself, and this is going to be bad because the fever will hit. And we remember that time, even Malaysia and Singapore got into recession, retrenchment, and all this, in my opinion, will repeat if we are not careful. And that's the reason why, if you notice this, our leader himself said that, right, this year may be more challenging than the previous, and we need to be very, very careful. So, of course, not only Singapore we are facing it, US is definitely clear on that. Look at Intel. They have just cut 311 more West Coast workers, all right, and there'll be more layoff coming up for 2024. And not only that itself, right, there are more than 900 over US tech sector employees on laid off since 2023 to 2024. And you can see that the companies have the biggest workforce reduction itself. There's a lot of people being out of job. So if these are all happening, how can you tell me that the soft landing is done? Now, to me, it's our Yellen. She has been saying that now the American people, the businesses have put us in a soft landing, okay? And the labor market is firing at all cylinder and low unemployment and so forth. But the thing is this, the numbers just doesn't seem to equate. As a matter of fact, it's all right. It seems that, right, the people are feeling that we are still going to see recession. So when you key into the, let's say Google, Is US in recession? You notice that although the economy is occasionally spotted with 2022 issues, but now they feel that now they are not in recession, at least according to traditional definition. Wait a minute, what do you mean by traditional definition? So the thing is this right now, even the Fitch, right, Fitch, one of the rating agency, says that world growth to fall sharply in 2024, but US recession avoided. I mean, how can the world growth be falling sharply and US can avoid that? So in fact itself, we look at it right from Reuters, it says that global bank sees no recession, but CNBC say possible recession, and Bloomberg says likely recession. So the question is, who should we believe? So this is really exciting because why? Jerome Powell himself says that there will not be any recession, okay? He believed that there's little bias that this is a recession economy. And he put out there that, but 3 weeks ago, he says that it could be a real possibility, but now it's not, and then most likely not. Okay, but you ask Jim Rogers, all right, he says that we are now in stocks bubble recession issue, all right. He believed that there could be an epic market crisis, okay, that's going to happen very soon. Now, of course, Jim Rogers have been calling for downside for some time, and he was definitely wrong for 2023. But the thing is this, to me, itself, he has his merit. Don't forget, he is the guy who basically co-founded with this George Soros, two of them did a quantum fund and did so well together. So to me, it's all right. Either one of them is lying or either one of them is not knowing what they're trying to do. So when Warren Buffett had to sell $8 billion worth of stock, right, Kevin O'Leary says that, no, it's okay. No worry, it won't crash the market. Now, I don't believe $8 billion will crash the market because it's not like back in 1929. But to me, for Warren Buffett selling $8 billion worth of stock does have some significance. So for Kevin, he says that although there is the interest rate issue and it could be just because of some rotational of the portfolio and stuff like that, I just feel that, right, probably he's missing something. And in fact, it's all right, given himself as a rich man with 400 million, I still don't think that he knows the billion-dollar game. And in fact, itself, we look at Berkshire Hathaway stock, it seems to tell me that there is a form of resistance at the moment right now. And this could actually means that very soon, if you see Warren Buffett shares, Berkshire Hathaway comes down to 488,000, I think that that is a very high possibility because we all know that Berkshire Hathaway is like a barometer of the US economy. So during back in this COVID period, you can see that the stock price came down from 336,000. It dropped all the way to 250,000 back then because the whole US economy didn't do well. But once the economy recovered, you can see that, wow, look at it. Incredible. So to me, it's all right. With the current situation right now, there's a very high possibility to see Berkshire Hathaway stock coming back down to 48,800 level. All right. And of course, if you watch this as a key point, then maybe I will be right if I say, if this stock price coming down, then maybe what I'm saying now could be exactly true. All right. And now the thing is this, because everybody believes that the Federal Reserve has already done raising interest rate. In fact, almost everyone around me thinks that they're done. And even myself think that so, because very clearly, if they don't if they continue to hike interest rate, right, there will be heavy problem on the mortgage side and a lot of other stuff. So to me, they are done. But the question is, if they're done itself, right, what will be going next? So apparently people feel that now because they're going to cut interest rate, hence therefore there'll be a chance of a soft landing. Now, I honestly don't buy this because to me itself, there's no such thing as soft landing. As a matter of fact, right, the big boys themselves, they are buying into bonds, tells you that there will not be soft landing. If there'll be soft landing, they should be putting their money all the way to the US stocks, not into bond, because bond is always used for asset class to take note. Because if the Federal Reserve really cut interest rates, right, the yield will go down, the bond price will go up. So that's the reason why the boys are buying into the bond market right now. And as a matter of fact, itself, right, it happened before. All right, in 2019, 2008, sorry. So it's all those times whereby market actually peaks, right, if you remember. So to me, all this tells me that we need to be very, very careful. Somehow, that's the reason why Bill Ackman covered his bond short position at the very bottom itself, right? It was epic. It was spot on. And in fact itself, he said this, there's too much risk in the world to remain short. And when he said that itself, we all know that that means there's a high chance that the Federal Reserve will have to cut interest rate very soon, because that means something is going to blow. So that's the reason why I feel that if you actually understand what Bill Ackman is trying to say, you should know that's right now being overweight in bond is now the consensus. And that's the reason why there's a very high chance now more and more people will liquefy their equity position to go into the bond market. And in fact itself, you look at the history, you can see that when the stock market was nosediving back then, when it's coming down, that was where the bond price actually went up. So I believe that this will actually repeat. And of course, if this really happened, that makes sense why the boys will be liquefying. That's the reason why I covered in the last video that the boys are actually liquefying their position, which is very rare. So in fact itself, even the workers and the employees are worried right now based on the latest update from Fidelity. They're saying that right now that they are basically tapping into their retirement saving funds and their hardship withdrawals. Okay, this is really, really not good sign. In fact, itself, right, they believe that the inflation is causing them a lot of stress and they can't work. And of course, they don't feel good at all. In fact, only 37% feel good, but 63% they don't feel good. This is a very good way to twist around the words, yeah? So the thing is this, in my opinion, so this is not a good sign because now, based on the last update, 92% of the employers are expecting an additional headcount cut, and in fact itself, they believe that there will be more cuts coming in. So that is the reason why this perfect economic indicator is so important. It's a conference board leading indicator, okay? Now this indicator has been perfect. Let me explain to you why it's called perfect. So first of all, you can see that every time when this index goes below the 0% mark, you can see the 0% mark here, we have a recession, which is the one in the gray area. So every time when the index goes down below the 0% mark, we have a recession. Similarly, recession and so forth, right? So the question is this, where are we right now? We are right here. So how can you tell me that there is no recession? So in fact itself, right, some will argue that maybe this is the first time the indicator can be wrong. But I'm pretty sure back then itself, everyone says this back in 2020 and so forth. As a matter of fact, right, LEI, right, basically, right, this index LEI provides an early indication of significant turning points in the business cycle where economy is heading in the near term. So it's not an immediate indication, it's an early indication. The coincidental economic index provides an indication of the current state of the economy. So if you look at it carefully right now, when it's below the 5% level, that is where it really confirms it. So over the time, okay, it's very clear that whenever this happens, when it basically hit the 5%, it's almost 100%, if not 100%, that we will have a recession, guys. So where are we right now? We are now more than 5%. We are now basically about 7.5%. Hence, therefore, we are definitely in a recession. But the question is, why aren't we seeing it? Because remember, because of traditional definition, that's why we are not in a recession right now. So to me, it's all right. It's just a matter of time. We will feel it. And from what happened to Lazada, I just feel that this is the one of the starting point. So in fact, now people saying that, look, the stock market is still doing well. There's no recession. That's what you can see. Yes, indeed. From what the stock market is performing right now, there is no recession. But remember, the thing is this, the stock market is seemingly the one that leads the economy, right? So if you look at this perspective itself, you don't think so. But again, if someone artificially bring the stock market out while the things are going down on the other side, what will happen to the stock market if later on when everybody realizes that the problem that's coming in, what will happen to the stock market? So of course, again, you may say, look, is there any more evidence? Well, look at it. This is the monthly decline. Now, every time when this thing happened, more than 22 times, 22 months in a row, confirm recession. And where we are right now, we are 20th month. So in short, if you don't believe in me, never mind. I said before, right, the recession will happen in March to April period. Now, March to April period will be 2 months from now, which means that, right, by March or April period, we will definitely see the recession because that will means that this will hit the 22 months. Now, previously, by the time you hit, like say, 8-9 months of this regression, we already see recession. But of course, the peak itself back in 1974 is at about 22 months consecutive. So we use that one as a guide. So that's the reason why I feel that by March, April, we will enter recession, okay? So that is the official one in my perspective, right? But of course, again, you can see that not only that itself, if you look at in terms of months with recession signal, meaning growth less than this minus 4.5%, you can see every time when it's somewhere around between 13 to 14 months consecutively, where growth is less than 4.5%, we enter recession itself. Yes, indeed. All right. So we are definitely there, minus 4.5%. But wait a minute. How about the credit spread? Well, remember, when the credit spread basically start to U-turn, that is always the significant start of the recession. So now the thing is this, we have the inversion, right? Usually the first inversion to the recession is about 18 to 24 months. So which means that mathematically, we will see the 24th month coming in by April. So again, the two numbers combined, we actually will see that recession. And as a matter of fact, it's all right. If you don't believe in the credit spread, you don't believe in LEI, how about this, the GDI? Now, GDI means a gross domestic income. Now, the thing is this, straight away you ask me, wait a minute, I thought we are using GDP. Now, GDP at the moment is up by 2.9%. Isn't that a positive light? Oh, well, there is a problem here as well. The way the economists use GDP, right, the way they calculate itself, right, has its flaw in my opinion. In fact, itself, GDI should be the one more reliable than GDP. I'm going to explain this to you. So take a look at this chart here right now. This is the GDP versus GDI. And of course, the one in gray is where the recession is. And of course, again, you can see back in 2007, before the Lehman Brothers crisis, you can see that the real GDP was going up. Can you see that? But the thing is this, the real GDI is coming down. And when that happened itself, which is what's happening right now, you can see that the GDP is up, but the GDI is negative. And when that happened, later on, okay, or 3 to 4 months time, you will see the recession, okay? So of course, if you don't know what's GDI and what's different in GDI and GDP, let me show you right now. So GDP versus GDI. First of all, GDP use consumption, but this GDI use wages. Investment versus corporate profits, government versus mixed income, export versus taxes, import versus subsidy. So from here itself, you can understand why the GDI is more accurate than GDP. In fact itself, right? For example, not all productive activities is included in GDP. So example, like the unpaid work and stuff like that, the black market activities are not included. And of course, if you put them all together, that's the reason why GDI is more accurate than GDP. So now you understand why it's all right. There is somehow some changes recently on the way the government want you to read. And of course, based on the current sentiment right now, we are definitely at the point whereby we must be very careful. Now, this is the fear and greed index, and we are now back to 74, 75, very near the extreme greed level. And based on the 125 moving average itself, right, every time when the market peaks, there's a very good chance it will come back down to the moving average. So if you look at it back here again, back in July, it was at 4,006, and later on it converged to about 4,004, and we went lower to 4,002, and that was where a lot of people were calling for sell. And then after that, from the bottom itself, it went back up again, and now at 4,008. So if you ask me itself, right, if the market do slide down, there's a very high possibility to see S&P going down to 4,500. Now that's about 300 points from where are we right now. So 300 points multiplied by 8, that means that the Dow Jones may drop by at least 2,000 points. There is a possibility for the Dow to drop by 2,000 points. Okay, the Dow, sorry for my bad writing, the Dow to drop by 2,000 points within the next 2-3 months. And that's the reason why we are actually on the sell side right now. We're not comfortable to buy at the moment. In fact, itself, right, other than gold, we are looking at more to the sell side for equity. And if you look at the stock price strength, we are definitely at the high level. And every time it's at 5%, the market will jolly well pull. So you can see that it happened before. When it goes to about 5% level, it will pull. And of course, based on the stock price breadth, oh my goodness, we are actually at a high level, and usually there will be selling, all right? And of course, not only this, let me bring you some more chart. You can see that this is a put-call ratio, and incredibly now, we can see that the put ratios are moving up. Now, that is what happened in July period. So remember July period, now I'll get back the chart to you. Then you can see that the volatility itself is still at the low end. So we look at this right now. If everything is doing well, it's all right. Everything should be going up. But why the economic figures are not following? Why the strengths at the high itself? And we all know usually when this level, there will be profit taking. And of course, the puts options are increasing, telling you that people are actually preparing for the sell. So remember, when this happened was back in July this year. And of course, what we saw in the stock market, it happened before when the market basically came down in July period. So the last thing is the dumb money confidence. Look at it. Now, when the dumb money are really, or the retail monies are really in the market, we can see that the market will pull, but not every time, because it happened before back in year 2021. The retailers were all the way in the market, but the market continued to go higher. But that is because there was the interest rate was just cutting non-stop. And of course, the low interest rate environment, therefore funds available, Federal Reserve pumping trillions of dollars on the market, then you have this bull run. But the question is this, can this sustain? Well, based on the technical chart, I don't think so. Let me show to you right now this chart here. Now, this is the Dow Jones chart, all right? And I want you to pay attention to detail, okay? So what I do is that I basically, hold on a minute. All right, I take the previous high here, and then I stretch it across the board to get you a support resistance. So you look at it, I stretch it over here, you can see why the market got itself resisted. All right, got the idea? Okay, so with that, we start out with the recent high back in March this year, last year, sorry, and we stretch it until this year, right? 2024. And that is the reason why now the market did break up and we have a new high right now. So the thing is this, the Dow cannot come down below 36,970 because this is a very, very, very important support. If the Dow basically loses that, the Dow may come back down to 35,605. And do be careful, because I believe that there's a very important confluence of levels, which is somewhere between 32,000. And if that really happened, oh my goodness, the Dow can go down all the way to 32,274. Now, I don't think we'll come to that point so easily. To me, itself, a pullback about 2,000 points, which is somewhere right here, I think is very more possible, okay? I believe that, okay? So that's how I see from the chart. And if you look at the long term of it, let me just show to you the long haul of it. You can see why I'm drawing this for you. This is my 888 video. You can see that. Okay, this is how it worked. You can see that back then in 2015, if you draw a line extension down, you can get the market resisted. And once the market basically broke resistance over here, boom, it went up, right? But the scary part is after it went up, when it pulled back, it came right down to the same area that where the blast up went. So this is very interesting. So with this technical understanding here itself, right, I realized that I do the same thing again. You can see that there were a lot of resistance, and when you break it, we have upside. And when it pull back down again, the market always use the technical point as a form of support. So if you repeat the same thing again, guess where you get your support, right? Got the idea now? So that's the reason why I have my belief that if the Dow pull back down, it will stop at 35,605 first. But if it goes lower, then oh my goodness, the next support can be all the way down to 32,000, which I don't think will happen, at least for now. So don't get me wrong, I think that about 35,600, I think that will be the main support for the timing, unless something drastic really happened, and that is beyond my expectation. All right, so first of all, before I wrap up this video, thank you very much for all the support you've given to me over the last few years. We hit our 888 video, and to thank you for that itself, guys, we are going to ask you to join us for a movie gathering with my TWB students. So this is the show I Did It My Way by Andy Lau. He acted this, and it's a very interesting movie. I saw the synopsis, pretty decent. So how do we win this ticket? Very simple. You just have to do this. Leave a comment in this video. I enjoy this channel videos. Okay, means you put the word I enjoy this channel video. Of course, if you don't enjoy, don't bother to write. So you write I enjoy this channel video, and then we will confirm that you did correctly. We'll put your name into a lucky draw, and of course, we will basically invite 6 people, okay, 6 people to join us on the 18th of January, Thursday, for the movie. All right, so popcorn and these drinks are all provided. You just have to come down and enjoy this movie with us. All right, so all the lucky draw will be done on 10th of January via Zoom, on our Facebook page, and then all winners will be notified on YouTube. All right, so thanks guys once again, really appreciate it. 888 videos is not easy. Please like, subscribe, and share this video. If you think this is all great information, share our friends. This is Cal signing off. Take care and have a great day. Bye-bye.